According to statistics, 97% of day traders are unprofitable. But what if I told you the 3 main reasons for this is psychology, transaction costs, and risk management? Now, you may say I already have those things down, but another reason people fail is because their strategy just sucks. This is why you should add this one thing to your trading strategy to improve it. I'm talking about multi-timeframe analysis. This is just an overcomplicated way to say you're using 2 or more timeframes. Now here's exactly how to do this. These are arguably the best timeframes to pair together: the 15 minute with the 1 minute, the 1 hour with the 5 minute, the 4 hour with the 15 minute, the daily with the 1 hour, and the weekly with the 4 hour. However, make sure to keep in mind that your first time frame is your higher time frame where you frame your setup off of. Your second time frame will be for your entry only. Here's an example on actual charts. Alright, so basically just give you guys an easier representation before we go to the live charts. Let's say that this blue line is the higher time frame, right? So we get a break of structure, market structure shift, whatever you like to call it, on the higher time frame. For me, my higher time frame is going to be the 15 minute. Let's say this blue line is the 15 minute. Now when price on the 1 minute retraces down into the range, we're going to look for our entry model, which mine is just the same thing, a break structure with the fair value gap. Then we would take that entry model, go higher, and we'll make the 1 minute red. So 15 minute frames the setup, break structure, bullish, potentially going up. The 1 minute frames the entry, potentially, if we get a confirmation, whatever our entry model is, to go higher, we would take that. That's all this is. Now I'm going to show you guys on real price action. So our most recent break of structure was here. So this is our most recent break of structure. So potentially from this range, we could go higher to possibly take these highs. And if we see, we do have liquidity up here as well. We have equal highs, so it's a possibility to go up here, but it's not guaranteed because nothing's guaranteed. So we'll see. If we get an entry model, then maybe we could take price higher. And as you can see, price did not go higher. We did not get an entry model, and now we are currently bearish. We tapped into this immediate rebalance right here. Now we have this gap up here, so we could potentially retrace into this gap. However, we get a setup on the 1 minute, we could be looking to just go lower from here. So we can see. We're going to play price out. So price did break below this low with a fair value gap, and we traced into the range slightly. So I personally would be looking to potentially take this, and I'd be looking to target a 1 to 2 since that's the closest. So I would be looking to take something like this potentially. So let's see. Let's look at the 15 minute now. So we can see the 15 minute is still bullish. We broke below this low now. So we could potentially continue to go lower if we tap into this setup still, which now that we have that, I'd actually be aiming to go even lower just for the fact that we have that low now. So we'd move that there. So we could potentially go lower, which increases our RR. However, if we just also get a setup here on the 1 minute, since the 15 minute is bearish, the 15 minute framed our setup, we might be able to find another entry if it actually indeed goes lower. Okay, so we ended up going lower again. So we could potentially enter here or stop here, and we could target a 1 to 2. However, we're very close to okay, boom. So that did hit. So this is very low in the range. We were in discount when we entered here. However, this setup did work out because we wanted to just catch a piece of this 15-minute range. So that did work out. So basically, all it was, like I said earlier, is framing your setup on the higher time frame. So we were bullish here. We looked for a setup, did not get a setup. Then we were bearish here. So then we were looking to go short. We did not get the setup. And then we were eventually able to get a setup to go short. Because remember, originally we were aiming for up here, however it did not reach up there. Then price was bearish again because we broke under this low on the 15-minute. So then we just looked for price to go lower, give our entry model, and then we took our entry model and it went lower. So, and then it went even lower. So that was about it. Remember, the 15-minute or your higher time frame frames this setup. It does not have to be the 15-minute. It can be whatever you decide to trade. So let's say this is, I don't know, let's say you decide to trade the 1 hour. So whatever frames you're set up on the 1 hour, for me it's a break structure. So let's just say this is your 1 hour time frame. You'd have your break structure, and then on your lower time frame, price would come into your range or however you trade, and then you would be looking for the same thing. You would be looking for your entry model just to go higher on the lower time frame. So if this was the 1 hour, this would be the 5-minute. Hope that makes sense. Hope you guys enjoyed this video. I'll see you on the next one. Make sure to subscribe.